Hi guys and welcome to the trading show. This week we are gonna talk about
markets, uptrend for the energy sector, our portfolio, safe assets on the move, tip of the week, trend following on mini S&P 500, and the weekly rollovers.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Week not particularly moving on the markets. Frankly speaking, there are no major market movements to report. Starting from the stock indices, we can see how these have been slowing in the last 5 days. There are negative returns both in America and in Europe. Slightly positive returns for bonds, and the energy sector is perhaps the best one. In particular, we can see the bullish trend of futures related to crude oil, heating oil, gasoline and crude oil, while on the other hand, natural gas is in a negative trend. Regarding metals, there is not much to report except the slowdown of the platinum that previously came from a strong bullish trend. Then we have negative returns for meats, while soft commodities and cereals show mixed returns. As for currencies, the EUR/FX continues its bullish run, even if it seems to have found some resistance around 1.21. And finally, we have Bitcoin, which this week lost 5.70%. It had managed to overcome 20,000 for a few days, but surely this round figure will be a difficult resistance to overcome. Talking about volatility, it is generally decreasing. We have seen that it has been a fairly quiet week. Even the equity indices, despite being slowing, show an historical volatility in contraction. In fact, it is easy to see how the ranges have narrowed over the past few weeks. As for the implied volatility, even here little to report, a very slight increase in implied volatility on equity indices due to the decline of this week. The term structure, however, remains in contango, so we can say that the markets seem to have stabilized after the big collapse in March. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hello everyone and welcome to this new appointment with the analysis of our portfolio. I am Alessandro Danos and this week I want to talk to you about the safe assets. With the definition safe assets, I mean the bonds and of course the gold futures market. These two markets are of course decorrelated for in some occasions from the equity indices, for example, but this is not of course always true. I mean not the in the 100% of the time stocks goes up and bonds goes down, so the decorrelation goes at times. And we can start from this first strategy that was developed during the months of the pandemic, so in March, April, we can say. It is a strategy that enters on the Treasury bond of the United States. So it's the 30 years bond of US. And as you may know, the greater the duration of a bond is, the greater will be the riskiness of that obligation, because of course the duration is much greater than, for example, 10 years bonds or 5 years bonds. This means that the treasury bond that has 30 years expiration has a greater oscillation during the day, so it moves and has volatility that is greater than the other bonds. And we can see that this strategy has taken very nice take profit, a short take profit. And as you may know, all of the bonds market, and also this one, of course, have a bullish bias. Also these two trades, you can see that they are in loss. But now we can also, this long was good. Now we can take a look at the strategy performance report, and we can start from the total trade analysis. And we can see that on the long side the strategy produced 54 trades, while on the short side just 24. This is because, of course, of the bullish bias that I mentioned before. So we know that it is inconvenient to make a lot of shorts. But we can see that the two sides of the strategy behaves in a different way. The long side has a high profitability and a ratio average win-loss that is negative. We can see here 0.48, while on the short side the strategy has a bigger ratio average win-loss. And most important, this time the ratio is positive and it is equal to 2.92. Of course, in this case, the profitability of the short side is less than the long side. But of course, this is due to the buy and hold, and we can see it here that in the last year and a half, the bullish bias of this instrument was confirmed. This is the equity line. As said, the 2020 is out of sample, and also the short equity curve is very good. Now we can go to look the next system. This time is on the gold futures market. I have already shown this strategy in the previous meetings. This is a trend following strategy that close the position at the end of the day. And we can see that this strategy this year performed really well, is continuing to perform well. We can take a look also at the strategy performance report. We can see also here this short. This is the equity curve of the short side. That is good, quite good in the last months. And also the equity curve long is good, so they behave very good together. The system doesn't trade during July and August, and we can see from the annual period analysis that the system managed to reach a profit of 26,000 with an average trade of $320.
Hi everyone, and welcome from Andrea Unger. Today I want to show you a particular approach to the mini SP500 future. We have already said multiple times that the mini SP500 future, that I remember is a future that is listed on the CME exchange, that is part of the CME group. This product in general has a high mean reverting behavior. This means that usually when the price goes far from an average price, usually their behavior is to come back around a mean value. So the main diffused approach on these markets are of course reversal, such as buying and selling on the extremes levels of the latest n periods, or in any case to go reversal in general. But for this time I wanted to try something extremely different, and the aim of this analysis was to find something that could balance all the reversal strategies I have usually in a portfolio, because of course even if the average behavior or the most diffused behavior on the mini-SP is reversal, it may happen also to buy and then the market starts falling, and maybe you have some contracts long on your portfolio while the market is falling, and of course this is not nice at all. Or on the other case, maybe the market is rising with a certain strength, and you are going to short the markets because it's rising quite significantly. And if the market continues to rise, of course, you will lose on average a lot of money. So the purpose of this strategy was not to find a very good strategy, a good trend following strategy, but the main aim was to find something that could balance, without losing money, some of my strategy I usually trade. Of course, we are talking about mean reverting strategies in general. So here what I did. I created this strategy, and I just take the opening price of the session. So we are talking about 5 p.m. o'clock of Chicago time, so the opening price at 5 p.m. of Chicago time, and then I will add and subtract two values, so a value, and this value is calculated in my case usually using the ATR, so the average true range, that is multiplied by coefficient. This approach is usually called opening range breakout, because you find a range around the opening price, but in this case I will not use the stop orders. I will just use the market order, and when the price goes over the upper band, so the opening price and the sum of the opening price and this coefficient multiplied by the average true range, I will go long, otherwise I will go short. And I also added a stop loss and a profit target per contract of $1,000, and finally I put a condition to exit at the end of the trading session. And when I saw the results, I just said it's not that bad, but of course you can see here there are some very long periods where the equity is pretty sideways, and in general those periods corresponds where the mean reversal approaches was extremely good, so it's pretty normal to find something similar. Of course you cannot achieve the consistency of the profits with this kind of approach, because it's against the main market logic that is mean reverting. But in my opinion there are some interesting aspects too, and the main aspect, apart from the shape of the equity curve, is represented by the goodness of the short side. In fact, here we can see that when the markets faced very difficult periods, such as in 28 or in 2020 here, where there was the pandemic effect, if we can say so, the strategy defended quite well the portfolio, the longer side, of course. So the other strategies that are mean reverting, and most probably they would have both some contracts in that period. And if we have a look also to the total trade analysis, we can see that the average trade on the short side is higher than the one on the long side. And this is an extremely rare scenario, and just because usually the mini SP or the mini Nasdaq, or in general all the American stock indices, has a very important long bias. And if we have a look to this chart that is called buy and hold return, we can see what would have been the effect of buying and keeping for all the historical data here one contract of the mini-SP. You can clearly see that apart from some very short period, such the 28 or the 2018 or the 2020 here during the pandemic effect, in general the mini-SP has a very bullish behavior or very bullish bias. So it's extremely rare to find a strategy with a higher average trade on the short side if compared to the long side, because of course it's much more easier in general to find good strategy on the long side than on the short side. So in my opinion, the objective of finding this strategy was successful, but I have to report to you that the consistency of this kind of strategy is not so good if we compare it to some other mean reverting strategies on this market. But it's interesting that, as we have said, just having a look to the equity curve, the 2020, it has been a very good year. Also 2018, where there has been a crash in February, it has been a good year, and in that year reversal strategy were absolutely bad, and they suffered a lot. 2017 has been a very low volatile year, but with a very high bullish trend in general. So the strategy that buys a lot far from the opening price, of course, has suffered, and it has been the worst year in general, 2017, but it's completely normal in my opinion. And in 28, where there was the crisis of the subprime loans and so on, it has been a quite good year in general. So if you don't expect the consistency from this kind of approach that is extremely particular and extremely against the main market logic, it can be a good strategy, but mostly to balance some other trading approaches like the mean reversal. And as usual, I would say that these of course are just suggestions. This is not a final strategy. If I would trade this strategy, of course, I would try to optimize a bit more this kind of approach and to develop it further, just to find a more acceptable and sustainable equity. And of course, we are talking also about the values of the average trade, net profits, drawdown, and so on.
Let's take a look at the rollover calendar for the next week. Next Friday will be the triple witches day, so called because stock index futures options and single stock options expire simultaneously. So during the next week we will see changes in the open interest and therefore market movements can be expected. As for the European indices, they are typically rolled 1 day in advance, while the American ones are rolled a week in advance. So, since today it is possible to roll over the mini S&P and the Nasdaq future. Finally, I remind you that we also have on December 16th the expiration of the VIX future. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call, totally free, with one of our tutors. We will talk about your current situation, what you are doing in trading, and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.